Now we've come to the part of our show where I talk about three things that I think individual investors need to focus on before you make your investment decisions. And so for me, valuations, that's number one. I think valuations, a lot of stocks, a lot of investments have been, I guess, revaluated, if that makes sense. The valuations have come down a lot in a lot of names, a lot of names that trade on the TSX, a lot of names that trade in New York. And so you want to look at some of these companies that perhaps you wanted to look at in the past, but were just too expensive. So we want to consider valuations, sell strength and buy weakness. I find that a lot of people, when I tell them that that's what I like to do, sell into strength and buy weakness, they tend to look at me, stare at me with this glare saying, what is this guy talking about? Why would he sell a good stock to buy one that's struggling? Well, we're going to talk a bit about that. And the third topic, or the third point I want individual investors to focus on, of course, like we have often up here, is economic data. And we've touched on the two pieces of data that I want to focus on, but we'll talk about them again. So let's get to valuations. And valuations on a number of stocks, as I've said, have come down tremendously over the past, let's call it, few weeks. The number one stock that I think for most of us, the biggest name that we all have come to know and love, NVIDIA. We have a chart on NVIDIA. Valuation on NVIDIA has come way down. And once well above 60, dropped to 40, then back up to 50 times earnings, now back to 40 times earnings, maybe even a little less now. NVIDIA, once upon a time, $140 stock at its peak. Now you're looking at 106 in and around that range. Not sure where it's trading today as yet, but when we took this chart, it was trading just above $100. So you can see, dropping 20-25%. There's been a re-rating of this stock. Looking at the valuation again and understanding that perhaps this is a name that if it fits your asset mix, if it fits your risk tolerance, if it fits your investment objectives, this perhaps could be a name that you want to take a look at. And so valuation, as you know, is a big thing for me. Looking at the price versus the earnings versus the growth rate is pretty big. And as we know, NVIDIA have not told us yet that they're that we should be nervous of their valuation, nor should we be nervous about their growth rate. Everybody seems to keep spending money on artificial intelligence chips. The next chart we have here is Alphabet, or Google, as most of us know it. Again, this stock was much, much higher. As you can see here on the chart, this stock is much cheaper even than NVIDIA, trading at 20 times, even under 20 times forward earnings for a company that's growing, for example, its cloud business, almost at 30% growth rate in the high 20% range. Obviously, it's artificial intelligence. It has search. It has everything. It even has driverless cars, self-driving cars with its Waymo division. This is a great company, a company that I think individual investors should definitely take a look at from a valuation perspective. Another name that I've talked about as well in the past, our next chart on Meta and, Meta Platforms, formerly known as Facebook. And this is a stock that's been a little bit all over the place, if I may say so myself. Stock traded at 550 at a high point, went down into the 450 range. Now it's come back just above 500. It's had definitely a great run. It had a great run on Tuesday, for example, after the market fell tremendously on the Monday. And Meta, another name like Google, trading in and around 20 times forward earnings. And they just blew out the numbers for their last quarterly report. It was a stock that did extremely well. And it has so many different things. We know over 3 billion users are active daily on their apps. And it's a stock that not only are they moving into the artificial intelligence area, going to be able to help those, but their ads, their digital ads, their, the Facebook, their Instagram, WhatsApp, all the different apps that they have. It's just a fantastic company, and a name that, as I said, is definitely not too cheap, not too expensive. So valuation, that's the first thing I think individual investors should consider. Second thing, we want to sell strength and buy weakness. To me, that's very simple. And I guess the saying really should be buy low, sell high. It's kind of the same thing, but yet how many people actually do it? Buying low and selling high. When I tell people we want to sell the strength and buy the names that haven't been strong as yet or haven't gone up as yet, people look at me, why would you sell a good quality company to buy a weak company or a company that is not doing as well as yet? And I say, well, that's exactly why, because I think the weaker company or the company not performing well will perform well. And the company that is at the top of the heap, the number one name, might struggle because of competition and because it's just very hard to stay at the top. It's much more difficult staying at the top than it is getting to the top, as I've been told many times by my father many years ago. So to me, this is something that I think individual investors want to do. And I have a couple of stock charts here. First one, I believe, is on AMD, and a name that, yeah, this name, unbelievable. $227 stock at its peak. Today, in and around $130, $135 a share. Unbelievable fall. So again, perhaps you sell AMD when it was 180, 200, 210, and now maybe you want to buy weakness. You want to buy a name like AMD. And don't get me wrong, the name is not weak. They had unbelievable earnings. They took up their expectations for the rest of the year. They took up their sales numbers. They increased their sales numbers. We were talking, 4 billion roughly in profits and sales, and they went up to 4.5 billion. So this is a company that is firing on all cylinders, it seems like. Artificial intelligence, PCs, automobiles, and yet the stock has sold off. So a name that definitely I think you could sell some strength to buy some weakness. The second name here, I believe we have a stock chart of, is Lam Research, a fantastic company. Lam Research makes the equipment that helps make the chips, chip equipment maker, Lam Research. This used to be a stock well over $1,000 a share, trading in and around or just around $800, just slightly below when this chart was taken. Again, a name that has sold off based on reasons that I think are not valid, at least for such a fall, and a name that I think you could look to buying the weakness. That's what we want to do. Another name here, Micron. Micron, they make, again, chips, but they make chips for specifically memory. Micron at the high, $157 a share. Today, in and around $90 a share. An unbelievable fall, 40% fall when we took this chart. And it's just a name that, yes, it's very cyclical. It has its ups and downs. It has its cycles, but a name that has been extremely strong, very important in the AI world. And, it's something that, yes, you want to trim when it is strong, but you want to buy when it is weak. A couple of names I wanted to get to here. I think the next one is Bank of America. And this is a stock that, perfect example of selling strength. I was a seller in and around $44 a share, $43 a share, but I quickly turned to a buyer, buying on the weakness, 37, buying on the dips, $37 a share. And this is a name that I think is a fantastic name to own. In my opinion, I think the best U.S. bank to own at this point in time, better than a Citigroup, better than even a JP Morgan, which I think is at the higher end of its range. Next chart, a chart we've shown many times here. This is a chart on Amazon. Amazon, another name, $200 a share not too long ago, a couple weeks ago, $162. Again, selling strength. I was a seller of Amazon in and around 200. And again, not a full seller of Amazon, but I would trim some of the profits. You can never go wrong taking a profit. And I think that's what individual investors have to realize. You want to trim back some of those profits and then move those profits into names that aren't doing as well. So I was a seller of Amazon for a little while there, and now I'd be a buyer of Amazon at this point. So keep that idea in mind. You want to sell strength. You want to buy weakness. And right now, there seems to be a lot of weakness in a lot of areas. Third point I wanted to discuss is the economic data. What economic data should you be focused on? Well, first, CPI. CPI in the United States is coming out. I can believe it's next Wednesday. And we'll see. Will the CPI data validate this slowdown in the US economy? CPI, measurement of inflation in the US. Will that validate the slowdown in the economy? And will that pretty much cement a rate cut of at least 25 basis points come September? The other economic data or data point I want to focus on here with a couple of charts. We're going to have one on CPI, but also Canadian jobs data. Canadian jobs numbers are coming out this Friday, and we've seen some weak numbers as of late. It's been actually flip-flopping a little bit. So let's see what the jobs data in Canada, and again, another number the Bank of Canada or the central bank will look at to see whether they cut interest rates again in September. So let's take a look at our first chart here on unemployment. And again, you could see that the unemployment rate in Canada moving up to 6.4%. Obviously coming off its lows, nowhere near what we've seen in the past, but definitely moving a lot higher. So that's, I think, starting to, I think the central bank or Bank of Canada is starting to take notice of the unemployment rate. And again, keep in mind, central banks have two mandates: full employment and stable prices. Stable prices is what they've been trying to achieve, but now we're starting to see that the unemployment rate is ticking higher. And so perhaps central banks need to now work on getting that under control. Second chart we have here, which is, there we go. We can pull it up here. Second chart. Here we go. US CPI. And again, you could see how the CPI rate, 3.3%, I believe it is, on the core, 3% on the headline number. To me, that just shows that things are starting to come down, but not fast enough. We see PCE, another inflation point for the Fed that they tend to look at, already showing about a 2.5% inflation rate. So what will CPI tell us next Wednesday? Will it signal that things are coming down? In my opinion, as long as it doesn't show a big slowdown, too much of a slowdown, like falling off a cliff, I think that a continued slowdown would be a good thing. And again, would cement a quarter basis point cut for the Fed. So these are the three things, in my opinion, individual investors need to focus on in the next couple of weeks before you make your investment decisions. Some economic data, valuations, and that old adage, right? You want to buy low and sell high.